Hey everyone, how's it going? Today we're going to be going into something a little bit more specific than usual, and it is how do I catch my trades? How do I even go about planning a trade based on price action? And how do I use certain tools to help me or guide me to get to, where I've gotten today? Number one, you have to essentially pick a certain style and stick with it. Once you've kind of found your way around a certain style, what do I mean by a certain style of trading? You go online, you see there's smart money concepts, there's Elliott waves, there's harmonic trading, there's Fibonacci trading. They're all in a way sort of related, especially Fibonacci and harmonics and Elliott wave. But people underestimate the use of incorporating smart money concepts, SMC, into those factors as well. Because if you know one of our coaches as well within Trading Floor, his name is Larry. He also implements this in a really great way. He says that Elliott waves will show him the way, and ICT gives him the trade, the execution. So it's really, really important to understand these concepts, hone in on them as well, because once you do that, then you can start to see and start understanding how to catch certain trades. Let's just go over an example of this. I'm not going to be too specific because obviously for the details, we offer the courses, we offer, the live support and everything. But on here, I can only give you guys so much. So number one, you can obviously see that we have some sort of roadmap. That's the important word, is I have a roadmap in mind. And that roadmap is that we're seeing some sort of correctional move to the downside, where we're in this potentially either 1, 2, 3, 4, 5 or WXYX Z. And you'll see that I have this random, not so random order block here. Anytime you see a box on my chart, that is an order block essentially. And if you don't understand why this is an order block, then feel free to check out Trading Floor in the description below. And without getting into too much detail, all I know is that I have my liquidity level set, I have my order block level set, and this guides me to then use my roadmap, which is this count, to understand that we could be hitting here. Because if you use certain fibs, they'll give you some hyper specific points, sure, but end of the day, you want to understand that there is a zone, because what you'll see more times than not within a fib sort of trade is you'll see something like this. You'll see potentially move up, that could come up like this, and then see a move down after. It's not always perfect. Hitting the Fibonacci is not always perfect. However, one thing that is very known about order blocks is they need to be respected. If they are not respected and they are violated, then that means you have either taken a trade for the wrong reason and you maybe missed a level of liquidity, or it is simply because you took it out of context and you didn't understand the higher time frame conditions of the market. Now, it's super, super important to understand that this is major resistance, hence why I have not given a roadmap that shows us going much, much higher. If we do, then obviously this roadmap changes and we have, major resistance flipped into support, and we could be going up to, some insane prices. But for now, because this is still there and because it's still maintained, I look at it as decent resistance. So that is just like a little tiny, I guess, light shown onto my methodology and how I think about these trades and why I sort of implement all of these different strategies. Because number one, it is nice to have a roadmap because you sort of understand the timing wise of when levels are supposed to be hit. You understand that, let's say, for example, this order block gets hit too fast. Let's say, for example, we didn't retrace down here and we just kept rising up and up and up. Then obviously this wouldn't be the case because this wouldn't be a correctional move. However, if we have this correctional move up here, then it becomes more likely, higher probability that this is resistance. So that's why it's nice to also have Elliott waves, which does also help with time confluence, because that's another important thing that I mention and that we always mention in Trading Floor is time confluence, how long it takes to hit a certain level, how long we consolidate for. These are all important details within the market. So understanding that we have a magnet here, understanding that Bitcoin and Ethereum have taken out, some major levels of liquidity, some pools of liquidity. If you guys don't remember, I mentioned in last Wednesday's stream even, and for the people within the Trading Floor Discord, I of course on Sundays mentioned what needs to hold in order to maintain certain biases. So with that being said, right now we are still looking for this red area of resistance, and this is the segment where we can just go over to classical analysis for you guys. If you're just here to understand like where the trades are, what trades I'm looking at, this is the section for you. So number one, we understand that we're still maintaining support. We've taken out liquidity, we've come down and retested these lows as support, and now we're moving up higher. So obviously, invalidation of this move up is going to be losing this low over here, because not only will that invalidate this as a bullish move, it will also invalidate this count, and then it could potentially be something like a W, X, and a Y down here for a swing failure pattern below $2,800. So for now, what I would do personally is, let's say for example, you would have taken a long around here, stop loss at the low, and then take profit at 3,500, sorry, not 3,500, 3,400, up to our resistance level, like so. And then potentially a very nice short all the way down to our area down here, below 2,800, below 2,700. So I would say around 2,700. Let's go over some specifics now in just a second. So something like this. We also not only have Elliott Wave and order block and also those OTE fibs as complements, we also have volume over here on Ethereum. We have this nice point of control over here, and we also have these nice fib levels over here, like so. So I would look for a take profit, majority take profit on my longs here. Keep a little bit running just in case we see a massive move to the upside, and then open a short up here at $3,400, going all the way back down to these lows over here. One area which I'm looking at as support is potentially this one-to-one extension over here, which hasn't been hit yet. So down here at just below 2,700, we have a one-to-one extension, which could be really nice as a trade. Now, I want to also take a break from Fibonacci and Elliott waves and just go over some smart money, quote unquote smart money. I don't like just labeling it as smart money concepts because I think the name is a bit pretentious, but let's just go over some other signs as well for support. Now on the monthly, the thing that you'll notice about the monthly is that, let me actually just clear up all this Elliott wave stuff for just a second. I need to organize this a lot better for you guys. But let's just clear everything up for now so I can get real with you guys for just a second and talk about this. The monthly chart looks like it could be taken out just a swing failure pattern and then moving up higher. That's going to depend how we close this month. Now, considering the fact that we only have about 2 weeks left until the month is over, it's going to be very important to see what happens. We have this order block over here, which comes at around the 3,400 level. We also have the current monthly high, which would then potentially be the previous monthly high, depending on where we close and how much higher we move up over here. If we go to the 3-month chart, let's see, July, nothing really crazy going on over here. Let's take a look at the weekly. Actually, I'm very curious about the weekly. See, on the weekly chart, what's happened is we've come down into this imbalance area for support. So it's a little bit difficult to say that we're just going to come back down and just fill out the 0.5. That is a potential. We can mark out the 0.5 like this, and you can see that's right there. There is a chance that we can just simply come down just to fill out this 0.5 area down at around 2,700, which lines up with our Fibonacci extension 1-to-1. Besides that, let's see what else we have. I'm just going to take it slow, for you guys, just so you can see start to finish kind of. That's interesting. So this low is also a trend line bounce, which, might not sound like much, but generally speaking, because it's a trend line bounce, that means that a lot of people are going to be entering the market here for longs, looking for, new highs until this is broken. For them, typically, breaking this trend line is invalidation, taking out these lows. So what's going to happen for the general market is everyone's going to long and everyone's going to put their stop losses around here, thinking that we're going to new all-time highs. It'd be really nice. It'd be really nice if we see something along the lines of this, where we come out, a little fake out over here potentially, and then come back down to $2,700 before coming up higher. Okay. Now, if I were to be completely honest, it's when looking at it in the SMC concept with order blocks and imbalances, it's not the most perfect level of support. It's not great because we also have these series of down close candles that will act as an order block down here. You can see them very clearly on the weekly chart. These ones right here, and this is considered an order block. So it is very possible that we also just simply go down to this order block instead, rather than going down to 2,700. So I would say that this would be the main level of support for the move down, if we do get the move down. And honestly, I would say that the short will remain the same, take profits at 2,700, but I am going to wait potentially a little bit for a sign of weakness, or sorry, not a sign of weakness, a sign of strength once 2,700 is hit. And what does a sign of strength look like? If we simply mark out these lows here, a sign of strength for me would be some sort of swing failure pattern move back up above these lows. You can also just highlight it like this. So I would essentially be waiting for this move up like so, and then you can put your stop loss at the low like this, and then look for your move up. So that's the only way that I would see in a trade after 2,700. Otherwise, if we just keep going down and down and down, then we could be going down to 2,600, 2,500, essentially just coming down to this massive area over here of support. So that is realistically all I'm looking at. And if you're wondering, well, what are you looking at after the support level? Well, I'm looking for, new highs over here, $4,000 plus, potentially all the way up to new all-time highs. But for now, just taking it step by step, new highs over here. Of course, we take profits along the way, but our main target would be these highs up here. But these are essentially the biggest support and resistance levels. This is my roadmap. This is my thought process. I hope it's been clear for you guys. And if you have any questions or just any other opinions, then of course feel free to leave them within the comment section below. And if you're interested in joining us over at Trading Floor, then be sure to do so in the description. Check us out in the description below. I'll catch you guys on the next one. Take care and bye-bye.